Okay, hello, good morning, everyone. For those who are watching live, we are doing paper 1, variant 3, October, November 2021. Okay, so if you have the paper, it's good. If not, it's on the screen, so you can have a look while we are doing the questions. Okay, so we have got 2 sessions today. One is from now until 12:15, and then next one is from 2 to 3 p.m. So we will try to finish as much as we can for this paper 1. Okay, so again, it is the title of the paper is here. You can see the paper that we are doing. Okay. All right. So we are looking at, again, I'm just repeating myself, October 2021, paper 1, variant 3. Question 1, why does the trader calculate profit for his business? All got the paper? You don't have the paper? The question is on the screen. You don't have a paper? Okay. Why does the trader calculate profit for the business? Look at A. Is it only to calculate interest payable on loan? No. To calculate provision for doubtful debts? Of course not. You're not doing your profit to calculate provision for doubtful debts. Are you calculating profit to know the total expenses of the business? Maybe, but is it only that? No. Okay, so generally the answer is to know whether the drawings are at a reasonable level because you want to make sure your capital is not affected. Okay, so that's why the answer is D. Hassan is a trader. During the financial year, he took goods from the business for his own use. How should he record this? What's the double entry? Remember, when owner takes things for himself, it's always drawings, debit or credit? Drawings is always debit. So the answer has to be A or B. Okay, answer has to be A or B. And when he takes goods, you credit purchases. Okay, the inventory account is only for total inventory. It does not record any double entry. All follow? Okay, so answer is boy. Where are the accounts of credit suppliers maintained? How many ledgers are there? Those who are watching, you can also answer. I'll try to see. Where? How many ledgers are there in total? Anyone? Guys, 4? No. 3. What's the 3? Purchase, sales, general. Only 3. Okay? Purchase ledger, sales ledger, and general ledger. Okay, if you don't understand ledgers, think of ledgers as a bag. Okay, a bag that keeps what? A bag that keeps all the accounts. Okay, think of ledgers as that. So your sales ledger only keeps all credit customer. Purchase ledger only keeps all credit suppliers accounts. And every other account is kept in the general ledger. Another name for general ledger? Anyone? Nominal ledger. Okay, so what's the answer for number 3? 3 is boy, right? B, purchases ledger. Okay, credit suppliers account is kept in the purchases ledger. Number 4, which document does a trader issue to remind a credit customer that payment is due? Which document? Statement of account. Okay, so now since this is a workshop, for those who are watching also, your paper 1, how many minutes? 1 hour, 15 minutes. So in total, how many minutes is that? 75. Okay, so if you take 70 minutes, divide by 35 questions, each question you got how many minutes? 2 minutes. Okay, so you got 2 minutes for each question. Now this question 1 to 4, they are all theory questions. So generally you're not going to take 2 minutes. You're going to take less than 1 minute. Okay, so later when we come across all the calculation question, probably you will take more than 2 minutes. So the questions that you're going to take more than 2 minutes, all these type of questions that we did number 1 to 4, you are going to take less than probably 1 minute. Okay, so it compensates. So if you follow that rule, you will have extra 5 minutes once you finish the questions. So that 5 minutes, you make sure you didn't miss out anything. Okay. Number 5, what is a check counterfoil used for? Check counterfoil is what? When you've already issued the check, there is a small piece left in the checkbook. Okay. To pay check into the bank, definitely not. To pay for goods purchased by check, no, because you're using the check to pay for purchases. To record check payment in the cash book, yes. Okay, so that's the source document or business document that you're using to record your transaction. Okay. So 5 answer is C. Number 6. Farooq sells goods on credit. A check from Khalid, a credit customer, was dishonored by the bank. How should Farooq record this? So remember, when customer pay the business, bank will be debit or credit? Bank will be debit or credit? When customer pay the business, that means the business receive money from the customer. Bank will be debit, correct? Money goes into the bank. Bank will be debit. Now, that check, if it's dishonored, you got to reverse the transaction. Okay? So, credit will be now bank. Correct? So, which is the answer? C. Only C has bank as credit side. Okay? Tumelo sells on credit. The terms of trade are listed. List price 200 per unit. Credit period 60 days. Trade discount 15% if 10 units or more are purchased. Okay? And cash discount 3% if debt is paid within 1 month. 1 month means how many days? 30 days. Correct? Now, a credit customer purchased 20 units. Okay? How much is the 20 units now? How much is the 20 units? 200 times by 20. What do you get? Calculator, you get 4,000, right? Correct? Now, if more than 10 units, you got 15% trade discount. So, 4,000 minus 15%, what do you get? 10% 400, 5% 200. So, total is 600. 4,000 minus 600 is 3,000. Why 298? So the answer is A. And then now we did the calculation, but what is the question asking you? How much is the total invoice? Now, does invoice include cash discount? Yes or no? Yes or no? No. Invoice does not include cash discount. Invoice only has trade discount. Cash discount is when the customer is paying Okay, invoice is when the credit sales is taking place. So how much is in the invoice now? Only the 15% trade discount. Follow? So how much is the invoice, guys? 3,400. Follow? Huh? Okay, you don't take into account cash discount. Cash discount is only when the customer is paying. Okay, so the answer 7 is B. Jane purchased goods and paid by credit transfer. How should this be recorded in Jane's accounting record? Credit transfer means how? Bank. Okay, remember, credit transfer means bank. Now Jane is purchasing, that means Jane is buying buying the goods. So they're asking in Jane's accounting record. So bank will be credit, correct? Because Jane is buying money out from bank. So which answer bank is credit? Only B. Can you see? Number 9, what is shown in the trial balance? Capital and profit on a particular date. Yes or no? No. Financial transactions for a particular period. Yes or no? Not transactions. Financial transactions are entered in your T account. In your T account. All the financial transactions. Okay? They are entered in your T account. Ledger balances on a particular date. Yes. Maybe. Let's see the last one. Receipts and payment for a particular period. No. Okay, so answer definitely is C. Okay, number 9C. Number 10. At the end of each year, PT Limited transfers 20% of the profit for the year to the general reserve. Okay, this one I have to do on the whiteboard. Draft financial statements were prepared for the year ended 30th September 2021. It was then discovered that the inventory at 30th September 2021 had been what? Overstated by? Guys, it's bigger here, right? Okay, overstated by? Inventory overstated by 1,500. Which effects did the correction of this error have on retained earnings and general reserve at 30th September 2021? Now, how do you do this? How do we do this? Anyone? 20% goes to 20% of profit for the year goes to general reserve. Now they're telling you that for the financial statement prepared year ended 30th September 2021, inventory overstated by closing inventory, overstated by 1,500. Now, if closing inventory overstated means what happens to profit? Why understated? Okay, look at this way. These are the kind of questions that it will take longer time to do. Okay, so just imagine your sales 100, your cost of sales. Okay, opening inventory 10, purchases 40, closing inventory 20. Now cost of sales is 30, correct? Now your profit, gross profit is 70, correct or not? Now, if closing inventory is what the question telling you? Overstated. Now, if this becomes higher, let's say this becomes 40, this becomes 10, this becomes 90. So now when you're closing inventory overstated, what happens to your profit? Huh? Higher, right? Correct or not? So now if your closing inventory is overstated, profit also higher. Now, they're telling you closing inventory overstated by 1,500, which means your profit is also higher by 1,500. Now, from your profit, 20% goes to general reserve. So how much is that? If your profit is higher by 1,500, from that 1,500, how much goes to general reserve? 300, correct? So now, if you correct the error, your profit becomes lesser. Correct or not? Now the error has made your profit go up. Now they ask you the effect if you correct this error, correct? Now if you correct this error, your profit becomes lesser. So your retained earnings will become lesser by 300 because they're telling you 20%, correct? So where is it decreased by 300? Is it A and your general reserve increased by 300? No, 20% is going where? General reserve, which means what? Which will decrease by 300? General reserve will decrease by 300. Follow or not? Your overall profit is your retained earnings. Okay, so now when you correct this error, your profit will reduce by. When you correct this error, your profit will reduce by 1,500 because that was the mistake. The mistake was what? Inventory was overstated by 1,500, correct? Which means your profit also will be higher by 1,000. Now, when you correct the error, profit become lesser by 1,500. From your profit, 20% goes to general reserve. So your general reserve now will be lesser by 300. So which is the answer? B, correct? General reserve lesser by 300. Profit will be lesser by 1,200 because total is 1,500. Follow? All okay? Oh, how many here? 1, 2, 3, 4, 5, 6, 7, 8. 2 is admin. Correct, isn't it? 2 is admin. So to the students got 8. Ashton, Jazin, Kui, Marissa, Queenie, Sarah, Willis, Iko. I hope you all can type something. I'll try my best to read. Anyway, so number 11. A bank's columns in a trader's cash book and the bank statement both showed positive balances. Comparison revealed the following differences. Okay, what was the difference between the balance shown in the bank column of the cash book and that is shown on the bank statement? How do you answer this? Anyone? What they're asking you? Both shown positive balances means what? Guys, what's the meaning of both shown positive balances? Cash book, bank column debit balance, bank statement will be? Bank statement will be what? Credit balance, because you know it's the opposite. Okay? Now they found out that uncredited check was 200. Bank charges not included in the cash book was $10. Now, what was the difference between the balance shown in the bank column of the cash book and that shown on the bank statement? That means, see, this question for me also a bit susah, no? A bit difficult. Okay, generally it means that they're asking you the difference of the bank column and the bank statement. Bank column is where? Cash book. Bank statement is where? From the bank. That means you have not done any update of your cash book. Between these two, which one will you update the cash book? You must remember your bank reconciliation statement. What will you use to update cash book in these two? That means they are telling you that these two is the difference that they identified why the bank column in your cash book and the bank statement is different. So it's generally us. First, you're doing what? What do you got to first do? Who remembers? No answer from there. Firstly, you got to update your cash book. Correct? And then after updating your cash book, then only you do your bank reconciliation statement. Why you do bank reconciliation statement? Because you cannot update bank statement. You can't update bank statement. Correct or not? So you do bank reconciliation statement. So what they're asking you is why and how both totals will be shown as a difference. Which is done now? Anything done or not? Both not done. Correct or not? You have not updated cash book. You're not doing bank reconciliation statement. So they're asking you, what is the difference between both? What's the difference? Do you understand now? Before you do anything, what will be the difference between your cash book and your bank statement? If they've identified this as the mistake. Why 190? Because you not yet do anything, you know. It cannot be, no, forget about answer. It cannot be 190. It has to be 210 because you not yet do anything yet. Okay? If you have done something, that means you already updated your cash book. Then maybe it's 190. Okay, but they have not done anything. So the answer has to be 210. Now, before, see how? What was the difference between the balance shown in the bank column and the cash bank column, the cash book and the bank statement? That means the balance of the cash book and the bank statement before doing anything. So it has to be 210. Now, which is higher? Which is higher? Cash book balance higher or cash book balance lower? Okay, the easiest way, uncredited check, where does it go? Bank statement or cash book? Bank statement. Correct? Bank statement is the easiest way to remember. Uncredited check goes to the bank statement because in your cash book, you already recorded it. Only when the bank statement comes, it will show you that not yet record. Correct? So if uncredited check shown in your cash book, which is higher now? Cash book higher? Follow now. Understand? So this is where you must know your fine details of your bank reconciliation statement topic. So you will not get it very seldom. You will get bank reconciliation statement in your paper 2. It will be in paper 1 in this way. So you must understand the fine parts of it. Okay, understand they ask you this question. They're asking you these two before anything happened, you know. They didn't ask you after they have done anything. So when you're going to do what you're going to do, it's $10, you're going to update your cash book because it was not included in the cash book. Can you see? And if it's not included in the cash book, this bank charges debit or credit. Bank charges will be in your cash book on the debit side or credit side? Credit side, because it's the charges. So now it's not in your cash book. So now your cash book is higher by $10, right? Correct or not? Uncredited check. in your cash book, but not in the bank statement. Again, your cash book is higher by $200. Follow? So that's why cash book higher by 210. Guys, I hope you all follow. Huh? Number 12. What is a reason for preparing a sales ledger control account? Whatever. Oh, never move. Sorry. What is the reason for preparing a sales ledger control account? Sales ledger control account records what? Trade receivables, all credit customers transaction. Okay. So is it to calculate total sales revenue? No. Total sales revenue includes cash sales. So A, definitely no. To ensure trade receivables pay on time? No. The account does not show when they are paying. Okay, only when they pay, you're going to record. To make sure that they pay on time, definitely not. To help prepare income statement, 100% no, because trade receivables is not in your income statement. To summarize the accounts of the trade receivables, that has to be the answer. You got a total summary of all your credit customer. Okay, so 12 is D. Okay, is this the question you all were talking about? Two companies each purchased what? Two companies each purchased their motor vehicle for 10,000, correct? At the beginning of year one, company G used straight line method of depreciation at the rate of 15% per annum, while company H used reducing balance method at the rate of 20%. What was the difference in the depreciation charge between the two companies for year two? Again, this question will definitely take more than 2 minutes to answer. Now, company what? G. And company H. Year one. G used what? Straight line. How much? 10,000 times 15%. So this is 1,500. Don't get mixed up. This is your depreciation. That's your yearly depreciation. Okay, it's not your net book value. So H used reducing balance. How much their machine? Also 10,000 times by 20%. 2,000. Year one got no accumulated depreciation, correct? Now year two, same. 10,000 times 15%, 1,500, correct? Year two will be, H will be 10,000 minus 2,000 times by 20%. What do you get? 1,600. Follow? So what's the answer? What are the different depreciation charge between the two companies for year two? H is higher by 100. Okay, now. All okay? Yes, no? Amit's financial year ends on 31st December. The following account appeared in his sales ledger. So if it appears in his sales ledger, means automatic, who is Deepak? Credit? Credit? Who is Deepak if it's sales ledger? Has to be credit customer. Okay. And then another way you want to make sure you can see sales here. So when you see sales, confirm this person is a credit customer. What does the entry on 21st November represent? What does it represent? This one is your Amit sales. Sold goods to who? Sold goods to Deepak. Bank means Deepak paid. Correct? 1,700. Cash means he also paid 230. Correct or not? Can this be irrecoverable debt? No, cannot. Okay, cannot. Discount allowed? Definitely cannot, right? All agree, definitely cannot, huh? Cannot be discount allowed. Balance carry down? 100% no, because here don't have anything. There's no balance brought down. Correct? Recovery of debt previously written off? No, so. Because if it's recovery of debt, it has to be what? It has to be what? What recovery of debt means what? He's paying for something previously. So the date has to be different, cannot be in the same accounting period. Okay, so answer has to be A. That's why there's no balance carry down. Okay, now there's no balance carry down. And what else? You see the date. January 7, June 3, October 30. This one is after how long? Almost 10 months, right? Correct or not? So it's obvious this amount was not paid. That's why it's a irrecoverable debt. Follow? Okay, guys. 15. Sally wished to increase the balance on the provision for doubtful debts account at the end of the financial year. How should this increase be recorded? Anyone? So this is where you must know that provision for doubtful debts account, when it increases, the provision account will be what? Huh? What? Provision account will be increased. I know, debit side or credit side? Credit side, right? Okay, so your provision for doubtful debts account, balance brought down is always on the credit side, correct? Now, if income statement is here, that means what? This amount is higher or lower? Higher or lower? Higher. Because when it goes to your income statement horizontal format, PVDD on the debit side means it's an expense. Okay, now this person, Sally, wished to increase the balance of a provision for doubtful debts account. So your income statement has to be debit, provision account has to be credit. Follow up. You must know it does not involve irrecoverable debts. So B and D 100% is not the answer. Okay, that's what you're supposed to know. Why? Why provision does not involve irrecoverable debts? Because irrecoverable debt has already happened. Confirm cannot collect the money. Provision is a estimate. Very good. Okay, provision is an estimate of credit customers who won't pay. So you're estimating from your trade receivables. All okay, huh? The following errors were found after a statement of financial position had been prepared. SOFP already prepared. What is the error? Loan repayable in 2 years' time had been included as a current liability. A provision for doubtful debts should have been created. What is the effect of correcting these errors? Now, Loan repayable 2 years' time had been included as current liability. You cannot include current liability. Current liability is everything below 1 year. So now when you correct this error, current liability goes up or goes down? Goes down. Correct or not? You're removing it from current liability. So current liability goes down. Look at current liability decrease, which is the answer? A and C. So B and D completely definitely wrong. Correct? It has to be between A and C. Provision for doubtful debts should have been created. Should have been means they never create lah. So now they're going to create. So when they create provision for doubtful debts, what goes up or goes down? In your SOFP, what does provision for doubtful debt affect? Current asset. Which of your current asset? Trade receivables. Okay, trade receivables must minus provision for doubtful debts, the total percentage. Okay, so now if you create, your current asset will go up or go down? Go down. So current asset decreases. Which is the answer? A. What happened? Okay, so answer has to be A. Current asset decrease, current liability decrease, non-current liability increase, right? Because you're taking out and putting in your non-current liability. And your owner's equity, why does it decrease? Who can tell me why owner's equity decrease? We already know the answer is A. Okay, but why does owner's equity decrease? Anyone? Lower profit, because provision for doubtful debts is an expense, so it reduces your profit. Transfer to capital account, your profit is lesser, owner's equity reduces. Follow? Okay. John maintains a full set of accounting records. Why does he also prepare statement of financial position? Profit, anything to do with profit, SOFP? A, definitely wrong. To check if capital assets equal to capital plus liability. Wrong, why? Yes. Ben's correct. Wrong. Why wrong? Why wrong? Actually, it's correct, right? To check if assets equal to capital plus liability. That's your accounting equation. Okay? But you are preparing the SOFP based on accounting equation. Okay? Based on that. That's the format of your SOFP. That's not the reason why you prepare your SOFP. Okay? To show the transaction which took place during the year? Definitely not. Transactions are all in the T account. To summarize what the business owns and what it owes? Yes. Okay, so that's what you're looking at in your SOFP. To see what the business owns and to see what the business owes. This one you all have to be able to answer. What's the advantages of a sole trader? Advantages of a sole trader. Anyone? Has to be A, right? Owner can keep all the profit. Can debentures be issued by a sole trader? No. Owner can make decision independently? Yes. Owner is protected by limited liability? No. Sole trader is unlimited liability. So the answer is 1 and 3. 19. Otherwise, annual trader making sole, annual profit of 24,000. He decides to admit Dilip as a partner. They agree that Anwar would receive a salary and profits and losses would be shared equally. The forecast appropriation account for the partnership's first year of trading is what? Profit for the year 50,000. Salary for Anwar 10,000. Profit available for distribution 40,000. Now, by how much will Anwar's total income increase? How are you going to do this? They're asking you how much is going to increase, based on what? Previous year. So previous year, he made how much? 24,000, right? Because you're a sole trader. So all the 24,000 goes to him, correct or not? Now once he become partnership, what do we got to do? Huh? They're asking you how much will his total income, right? Now, 40,000 divide by 2. Yes, sir. 30,000 lah. So 40,000 is his profit after paying salary, the business profit. So 40,000 must divide by, what do you get? Now his salary for the year is, his total income is, last year his income how much? 24,000. So increase by, so answer is B. Okay, so 19 answer B. 20. Kasi and Ravi are in partnership. The financial statements for the year ended 31st August 2021 showed that Ravi was entitled to interest on capital and interest on loan and was charged interest on drawings. Which entries would be made in Ravi's current account? What will enter on his current account? Interest on capital, Ravi's current account. Current account increase on the debit, increase debit side. Current account similar to income account. Increase will be on the credit side. So interest on capital. Is Ravi receiving the money or is he paying the money? Receiving. So we must know that interest on capital is credit side. Correct? So which is the answer for credit? C and D. Interest on loan? What does the question say? He was entitled to interest on capital and interest on loan. That means what? He give the business loan, he get interest. Just like how he provide capital, he get interest. So interest on loan also credit. And the last one will be interest on drawing. So the answer is C. Hey, where's Lucas? Okay, 21. BCD Limited provided the following information. Ordinary shares 300,000, retained earnings 200,000, debentures 170,000. How much was the equity and the capital employed? Equity is what? Equity is the anyone equity? Equity is your capital. So when it's concerning limited company, we don't call it capital. It's part of the capital structure. So equity is owner's equity and borrowings. So in this case, which is the equity? That means the money that is part of the capital of the business. Ordinary shares, retained earnings. Okay. So how much is that? 500,000. So answer has to be between C and D. What's capital employed? Why 3 add together? Because capital employed is your capital plus non-current liability. Okay, not liability, non-current liability. So debenture is a non-current liability. So 500 plus 170 is 670. The answer is D. 22. The issued share capital of CD Limited consists of ordinary shares. Retained earnings were 86,000 on 1st September 2020 and 88,500 on 31st August 2021. The company made a profit during the year of 26,000 and made a transfer to general reserve of 5,000. What was the total ordinary share dividend paid during the year? How are you going to find this out? Retained earnings was 86,000 on beginning of the year. End of the year, 88,500. What's the difference? 2,000? 2,600? 2,500 is the difference. Correct? So retained earnings is the balance. Okay, now. So 2,500 was the difference. The company made a profit during the year of 26,000 and made a transfer to general reserve of 5,000. So 26 minus 5. Remember, general reserve is transferred from. General reserve is not transferred retained earnings. General reserve is transferred from profit for the year. Retained earnings is the balance. Okay, now. So now they transferred 5,000. So 26 minus 5 is 21. Correct? How much was retained earnings for the year? Just now I told you what. What is the difference? Opening retained earnings and closing retained earnings. 2,500. So that was the balance. Now, from the profit, they paid 5,000 to general reserve. Balance is 21,000 minus 2,500. What do you get? How much you get? You understand now? So you all must understand is, what you must understand is from profit, you are paying for dividends. Transfer to general reserve. And then final balance goes to your retained earnings. Okay? Now how much was profit? 24,000, correct? No. How much profit? 26,000. How much they transfer to general reserve? 5,000. Now we want to find out what is this. Correct or not? How much was the end of the year retained earnings? 2,005. How we know? Beginning of the year, 86. End of the year, 88,500. So it increased by 2,500. So what is this? 24 minus this 2 lah. How much you get? 18,500. So answer is follow up. Yes or no? So when you see when we study limited company, you must remember your profit structure. Your capital structure is always your general reserve, retained earnings, and share capital. They don't pay share capital; they pay the dividend. Wonder what's your question? I just told you 26,000 minus this 2, because from this 26,000. They are paying this, balance goes to retained earnings. So we don't know what is this, but we know this too. Follow up. Ben, what's the problem, Ben? Sure. Wisdom? Your question is in the phone. All okay? Wisdom, I know. 24. What is not part of the prime cost? Yeah. Oh. What is not part of the prime cost of a manufacturing business? Raw material is your prime cost. Consists of what? Direct material, direct wages, direct expense. Direct material, direct wages, direct expense. The most common direct expense is royalty. Or they will tell you any expenses that's directly there. Okay. Raw material, part of prime cost or not? Yes, because it's direct material. Royalties is a direct expense. Wages of factory supervisor? No, that is part of your factory overheads. Okay. Wages of factory supervisor is part of your factory overheads. And your last one is wages of production workers. That is your direct wages. So answer is C. Okay, we stop at 25. The next one we start at 26, so 10 questions. The value of Tato's work in progress increased during the year. Again, oh, we only. Yeah. I skip 23. Yeah. Let's skip 23. Oh, yes. Yes. Thank you. Oh, I skip 23. Yeah. A sports club was formed on 1st August 2020. During the year ended 31st July 2021, the club purchased equipment costing 5,000 and paid by check. In which of the club's financial statement did this appear? They bought what? They bought equipment. Equipment is a asset. Can it appear in the income and expenditure account? Cannot. Income and expenditure is only income and expenses. So answer definitely between B and C, correct? SOFP? SOFP no. Why no? Yes, definitely yes. So again, answer between B and C. Receipts and payment account? Yes. Okay, receipts and payment account records everything. Okay, now. So answer is what? B. B for boy. We finish 24. Okay, we start 25 next session. Okay, so we stop here. We'll continue at 2 o'clock. 2 o'clock, we continue with question number 25. Okay, thank you very much. See you all later.